What's up, everybody? Today we're going to be talking about HIMS, why they're down 9%, what I see in the charts, and also what I see going on with the company. So, HIMS is down today due to Amazon expanding their pharmacy and telehealth network. Now, look at all the businesses. This is the first point I want to make. Look at all the businesses that Amazon has. Look at all of them. This company can't keep it straight. This company is like the worker that has a cluttered desk. There's crap everywhere. They got spilt coffee on everything. They got a million pens and sticky notes and just junk everywhere, all over their desk. They're the most unorganized employee in the whole entire office. That's Amazon. Amazon tries to disrupt so many businesses, and they're spread too thin. They're spread too thin. So Hims is down because they think that investors think that Hims is going to die and go bankrupt because Amazon is expanding their Amazon pharmacy and their telehealth and coming after a similar market. Well, two things. One, I'd rather have the horse in the race that is focused on winning and focus on one single objective, right? Instead of the horse that is focused on a over 100 different small little, side gigs. These are all side gigs, guys. What is Amazon's main business? It's e-commerce and it's Amazon Web Services. Those are their two main businesses. Everything else on this list is little side gigs. Just like you have a main job and you might have a little side hustle, but you're not going to put as much time in your side hustle as you do in your job because your job is your breadwinner. Amazon does the same thing. Look at, I get Amazon Studios, it's done well, but they were supposed to knock off Netflix. They were supposed to be the next streaming giant. Did they? No. They're eating breadcrumbs. Just like Disney, just like Hulu, just like Paramount, just like Warner Brothers Studios with Max. They're all eating breadcrumbs. Okay? Also, they were supposed to have they were supposed to, disrupt the iPhone. They were supposed to disrupt so many things. And I'll tell you, when they took over Twitch, uh, you know, they destroyed Twitch. All Twitch is ads and just like it's poorly ran. And I don't know if you guys ever use Twitch, but it's just very poor. It's gone way downhill. They don't update it. It's not like getting better like it was back in the day before they bought them out. And that and all those other examples, and there's so many other examples on here, should tell you this is FUD, fear, uncertainty, and doubt around HIMS. HIMS is focused on one sole company, one sole goal. Amazon is spread too thin, and they will always just focus on e-commerce and Amazon Web Services 1 and 2. Everything else, everything else will be a side hustle. Second thing I wanted to get into before we get into the charts. This company, it's you have to understand CVS and Walgreens will eventually die. They will eventually die, or they're just going to keep on having to close up stores because people rather have the medication shipped right to them. I can't stand if I have to get medication and having to go, drive there and wait in line and like do all this stuff, or like I get a prescription and then it's like, oh, well, it's not going to be ready till this time. I got to go all the way home, and then I got to go out and find time to go get it. Like, nobody wants to do that. Your prescription coming straight to your door, that is it. And so let's say Amazon does carve out a little role for themselves here. Well, you have CVS and Walgreens that have immense business still, right? But they're slowly going to lose it over the years. That's immense TAM. That's an immense total addressable market for hymns. So even if Amazon does make a little nice side hustle for themselves with this, hymns isn't going anywhere, and there's plenty of room for players in this field. Plenty of room. So let's get to the chart. Hims is down 9%. It's been going back and forth. I've been buying this name all morning. I bought it all the way down here to like 20, low 24s. I'm just buying this name like crazy right now because when you have conviction on the fundamental side and you have conviction on the technical side, and I have both with both my strategies, you buy on these types of dips. You don't get shaken out of the tree. You buy on the dips. You buy every share in sight that you can. Why? Because as soon as people start to realize, you know what? They just had really great earnings and they're a big growth company and like things are looking bright, or people forget in a week or in a day because there's so many things that go on. This name will start to go back up. Buyers will come back in. So you have a cup and handle. With a cup and handle in any charting pattern, when you have a breakout, 80 to 90% of the time, what do I say? You are going to have a pullback. You are going to have a pullback and you are going to have a retest of your breakout area. Now we're right in that zone pre-market right now, and we could have a little flash crash down here on open. I expect some weak hands to have hit the sell button and placed an order to sell all their shares as soon as the market opens. So you'll probably get a quick flash crash down here. But all that really matters is that we hold this area in here and we basically get this bounce and then we go higher. That's what a retest is. A retest is when you have a a breakout and then a subsequent fall back to that area, which this was resistance, couldn't get through, couldn't get through, couldn't get through, and then it finally busted through, and then it comes back down, and it's now support. This is now support for this stock, not resistance. And a huge 9+% day like this is going to act as support. And after the FUD goes away, and after people use their brain and realize, okay, this is a bit dumb, right? They're a $6 billion company in HIMS, where CVS and Walgreens are much larger, and their main business is medication. And then Amazon is just increasing, their telehealth a little bit. Like, come on, guys. Like HIMS has proven leadership. They've taken this company and just completely um continue to kill it. Continue to do new things, continue to kill it on every front using AI, being personable. HIM's experience is so personable. Is Amazon's side hustle going to be that personable? Ask yourself, is it? I don't think it is. Look at Twitch. Twitch is not personable anymore. Twitch is just a money grab for them. You can't watch someone stream on Twitch unless you were subscribed to them for $5 a month basically. Because if you're not, you are going to see ad after ad after ad after ad and you can't even watch it. It's worse than like cable ads. Guys, it's worse than cable ads. It's horrid. It's horrid. I am not worried about this whatsoever. And we still have the high five setup. Like I said, we're going to get this retest. We're most likely going to get the bounce, in my opinion. Why? Because we're still uptrending. And this is a weekly chart too, so it takes a lot to move this. We're still uptrending on the MACD. We're still uptrending on the RSI. And this will be good for the RSI. Give it a little pullback here. Get back to the 50 range, and let's make another run. It pulled back off this 30 line. Somebody asked me, oh, what happened yesterday? Well, even numbers, especially rounded numbers like $20, $30, $40, $50, those are big fat like rejection numbers. Why? Because it's such a round number. I don't know. It's the psychology of the markets. The psychology of the markets, they don't like those big round numbers. I don't know. People are like people set their sell prices at $30 exact or $40 exact. People like to be clean and not have the like $30.17. They want to be like exact. So I don't know. The rounded off numbers like that, especially the like tens, 20s, 30s, 40s, 50s, 100, they have, usually historically a lot of rejections off of them. So just a little rejection and now getting a beautiful little pullback off some FUD. Um Retesting the area we needed to retest and yeah, I think a lot of people are going to be just kicking themselves in the butt for selling their shares that they did or not buying at this opportunity. I was saying down here was a massive buy because you had them playing around with the stock and it going sideways after they demolished earnings. And I was like, this is a buying opportunity. This is a buying opportunity. This stock will go higher. You had a bull flag retest and we went higher. Now we have a cup and handle breakout retest. We'll go higher. We'll be at $35 probably before the end of the year, is my prediction. Also, last thing, we have our trend moving nicely through the sweet spot. And we have our consolidation box on our Williams R that it keeps going sideways. As long as it doesn't break below this low right here, which is our support on the Williams R, we're good. And we have plenty of room to fall with this little pullback to basically come down to here and then continue sideways as we keep running up. So that's my take on hymns. I figured I would make a video and, just put all my thoughts into a video. And so you guys can all hear and, see visuals of what I'm thinking. I made two pretty good posts about it. They're driving pretty well with everybody and I think people are understanding, but I think this video will be a better like example and demonstration of what I'm thinking, what I'm seeing, and how I'm playing this name for my long-term portfolio and as a trade and my options. So appreciate if you stuck around to the end of the video and thanks for watching. I'll catch you in the next one.